Hey, this is Arthur Hill, Chief Technical Strategist at TrendInvestorPro.com. You are tuned in to Next Level Charting. Thanks very much for joining us. So we've got some strange happenings in the Nasdaq that I want to point out today. And then one of the trend indicators that I'm watching for the Fab Five: Microsoft, Amazon, Google, Apple, and Facebook. So there are some extraordinary happenings in the market right now, and these extraordinary happenings are centered around QQQ, the Nasdaq, and the Nasdaq 100 stocks, and in particular what we would call the Big Four. And if you include Facebook, it would be, say, the Fab Five. And what is so fascinating about this period is here you can see the top holdings for QQQ. And Google gets counted twice because they have two separate trading vehicles there. But all told, they're accounting for 7.5% or so of the ETF. And then you throw in these other three, Apple, Microsoft, and Amazon, and you're at well over 40% for just three stocks. And then Facebook comes in at 4% or so. So that's just QQQ. And then if we look at the S&P 500, we can see that these stocks are commanding quite a presence there in the S&P 500, which is supposed to be the 500 largest stocks in the S&P 500 or in the U.S. stock market. So there you can see we've got Microsoft, Apple, Amazon, and then there are the two Googles there. And all told, they're at more than 20% of the S&P 500. That's just four stocks. So that means the other 496 stocks have to divvy up that 80%. And what is happening is the concentration of these large cap stocks has become the most in quite some time. And let's look at an article from Sentiment Trader. So I'm on the Sentiment Trader website, and this is an article from Jason Gopert. He runs Sentiment Trader. He won the Charles Dow Award for the CMT Association years ago. Great analyst. And if you're interested in sentiment, this is definitely the place to be. But for the first time since 1979, only five stocks account for more than 20% of the S&P 500 market cap. And then if you look back in 1979, you had IBM, AT&T, followed by GM, GE, and Kodak. How about that? So things have changed quite a bit. Now, if we look at the picture, there's a chart just below this. And if we look at that, we can see the top five stocks there and the rate of growth in their market cap. And Gopert was looking at the rate of change. And this is the biggest rate of change in market cap as a percentage of total market cap since 1999. So it looks like we're partying like it is 1999. So, this isn't a call for a top, but it's telling you that things are getting frothy. And I got a few more indicators to show you. So now let's look at QQQ itself. This is a chart going back to 1999, which is when QQQ began. And it began with a bang and then had this huge surge when we were going parabolic in 1999, 2000, and then had that sharp crash after the dot-com bubble burst. And you can see there's a 200-day EMA. And the reason I'm using an EMA is because I need to use the PPO to show the percentage above the 200-day EMA. So when the PPO is set to 1, 200, 0, then you can see the percentage above the 200-day EMA. And back in 99, 2000, you can see we were almost 50% above the 200-day EMA. So if you look at where we are now 20% above the 200-day EMA, and that is the most since that dot-com bubble burst. So even when we had these big advances in 2003, 2009, 2012, and 2018, and here we didn't get 20% above the 200-day EMA, but we did now. Now, the thing about this is you could become 20% above and you could become 40% above the 200-day EMA. If this is a parabolic advance, you never know when it is going to end, but often when it ends, it's going to end abruptly and it's going to be a sharp reversal. Now, we just have to watch the trend. I've got 5 big stocks that I want to watch as far as the trends are concerned coming up. But this is telling you that the Nasdaq 100 QQQ is getting pretty frothy. Now, the third thing I want to look at here is Nasdaq volume relative to NYSE volume. And this is a ratio chart here. And that's invisible, that ratio of Nasdaq volume to NYSE volume. And to smooth it out a little, I put a 5-day moving average. That's the blue line. So you can see Nasdaq volume relative to New York volume is expanding in 11, 12, and 13, but nothing outrageous. And then it's declining in 14 and 15. And then it's expanding in 16, 17, and 18. And then it contracts in 19. And then it started expanding here in 2020. And look at this expansion. Nasdaq volume relative to NYSE volume has really exploded over the last few months. And it is really a sign of frothiness as well. Now you can see total Nasdaq volume in green and NYSE volume there in black. Now, since that first chart went back to 99, 2000, I'll show that period as well. There you can see Nasdaq volume relative to NYSE volume taking off at the end of 1998 and expanding. And it got to be twice as much as NYSE volume back in 2000. And then Nasdaq volume relative to NYSE volume declined in the bear market there. So this is another sign of frothiness, what we're seeing over the last few months in Nasdaq volume relative to NYSE volume. And finally, I want to look at outperformance of the Nasdaq relative to the NYSE. And the reason I like to use these two is because there's very little overlap between these two exchange indexes, if you will. You're either a Nasdaq stock or you're an NYSE stock. So we're going back 10 years or so, and we're looking at performance. And so here is the Nasdaq, and it starts outperforming in 2012 and continues to outperform, gets a big outperformance in 16 and 17, and then turns volatile, but is still outperforming. And look at this outperformance here, up 220%, and now up 381%. That is a crazy move. And so here's the New York Stock Exchange. And the New York Composite, you can see on a performance basis, has yet to get above that January 2018 high, whereas the Nasdaq's just going ballistic. And so I've got a price relative here. That's the gray line there. That's the Nasdaq relative to the NYSE. And then I've got the rate of change. This is a weekly chart, so this is a 20-week rate of change. And you can see in 2020, that rate of change has just soared. It is the highest in over 10 years as the Nasdaq just runs away from the New York Composite. And so it's okay to see outperformance, but when the outperformance gets extreme, that warrants a little bit of caution going forward. So one more little anomaly that happened, and that was on Monday when the S&P 500 was up 0.84%. This is actually, it's the S&P 500 is up 27 points, up 0.84%. But you can see there were 321 decliners and 177 advancers, almost a 2-to-1 ratio of decliners over advances. So there you can see it's a net minus 144, and 80% was minus 28.8%. So that's a pretty big advance in the index to have such negative breadth. So it tells you that there was pretty limited participation in that advance, and it was mostly those large cap players, large cap techs in particular. So as we know, the market can remain irrational a lot longer than we can remain solvent. So, this may seem like irrational price behavior, but to tell you the truth, there's no such thing as irrational price behavior because price behavior is neither rational nor irrational. It just is what it is, and we have to take it at face value and look at the evidence and look at the trends and trade accordingly. And so here's some of the recent commentary on trendinvestorpro.com. And what we were focusing on last week, Monday in particular, were some consolidations and some Bollinger Band squeezes, and we got some breakouts. So I have a very detailed video discussing the Bollinger Band breakouts among a number of ETFs. And then we look at seasonal patterns going back to 1950 for gold, bonds, stocks, and the dollar just for grins. I don't care too much about the dollar. And also update my timing models on a weekly basis as well. So check out trendinvestorpro.com if you have further interest. And don't forget, there is a link to trendinvestorpro.com in the show notes below. So when it comes to QQQ and the Nasdaq 100, and then to a lesser extent, but still a big extent, the S&P 500, the future is in the hands of 5 stocks, basically, in particular 4, Microsoft, Apple, Amazon, Google, and then Facebook. And so those are 5 stocks, and I've got 5 trend indicators here. And the thing about these indicators is you never know which ones are going to trigger and when. So what I like to do is kind of take a weight of the evidence approach. If you have 5 indicators, if 3 trigger bullish or bearish, then you have a consensus signal, if you will. So 2 indicators on the price chart. We have in pink the Bollinger Bands, 125, 1. We have the Keltner channels in blue, 125 to 125. You can see the settings up there. Then we have the PPO 525, 0. We have the full stochastic 125, 5. And we have the commodity channel index 125. And you may see a lot of 125s out there. Well, 125 days is around 6 months, and that's my kind of sweet spot when it comes to trends. So the red line shows when 2 of the 3 turned bearish there in mid-March and then bullish there in mid-April. And trend following indicators are not perfect. They're going to give you whipsaws. They're going to get in late. But if you catch a trend, you're able to ride it. So I'm running out of time here, but there is Apple, and you can see the breakdown, and then the uptrend started in mid-April as well. Then we look at Amazon. The uptrend actually started in late March. It was one of the first. That was a sign of relative strength, and look at that move. So they're all in uptrends. Google was one of the later ones to start an uptrend there in early May. So it's kind of a laggard, but it's in an uptrend. And Facebook is also in an uptrend and kind of a laggard. But these are the ones to watch. And if 3 of these 5 indicators turn bearish for the majority of these 5 stocks, then we have an issue, a reversal working in the Nasdaq 100. All right, so that concludes this edition of Next Level Charting. If you'd like to know more about trendinvestorpro.com, please click on the link there below in the show notes. Thanks for tuning in, and have a great day.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're going to bring you daily content from an incredible collection of technical analysts and financial experts.